Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to another week at Trade Day on Monday, the 4th of March, as we go into the month of March with Steve Miley here on the call for the Bull versus Bear webinar. So, welcome everyone. We're going to go through a slightly different run through that we do for a Monday. It was very useful last week. If you were on last Monday, we kind of discussed about the shape of the week and why it was important because even as day traders, it can give you a hint to what might be coming in volatility for different parts of the week. And we identified last week that the major we've been bullish the week before. We had a big bull run. We had no real significant events in the first 3 days of the week with significant events, the PCE and PMI data last Thursday, Friday, and we looked for a sideways consolidation at the beginning of the week and maybe more of a trend in the second half of the week. And that's certainly what we saw last week. So this is useful even as a day trader. So it sets you up for the week, what you might do with respect to thinking about volatility, how much the market could potentially move on any given day, given the potential data events and what's been going on previously. So obviously we're on, again, we were sideways and then bull break, and we had the Nasdaq actually hit a new record high. So I'm talking about that in here, but we'll run through all the macros. We'll take a look at the bigger picture, what I like to call the shape of the week. So don't forget, just below, if you are watching this live or if you're watching this on the catch up at the members area, then just below where you are, there are three columns: the technical analysis reports, the macroeconomic reports, and the news events, the news reports updates that we get from Live Squawk. So in that middle column, we have these that I post every weekend. So there's the macro matters, which is a more in-depth look at what's happened and what we've got coming up. So in here, you can see, I've done over 4 pages here. And then we get kind of the summary of that, the weekly recap and outlook. So we're going to use that today to run through for our shape of the week. So first of all, let's have a look back. So as we said, the market kind of went sideways. The Nasdaq did made a new record, a 27-month high. We took out that high at the end of last week. Data-wise was the PCE and PMI data that we had at the end of the week. In here, PCE data was just in line with expectations. So remember, this is the Fed's preferred inflation measure, in line with expectations, but the market liked that. When I say the market, I'm talking about the stock indices, and we went higher in price. And then the PMI data was fairly decent from China, Europe, and UK. US data was mixed. The ISM manufacturing PMI contraction, but nevertheless, the market still went higher. I think if anything, again, a little bit in here, if the data is slightly weak, the market's liking that. Why is the equity market liking that? You would think weak data, poor for the economy, poor for stocks. Well, if it's only slightly weak, it's not showing then we've got a significant risk of a recession or a hard landing or a particularly significant slowdown in the economy. But what it does mean is that we could potentially see a shift, an earlier shift for rate cuts from the Fed if they see the economy weakening. So it's not enough to sort of cause concerns for the overall economy. It might shift the Fed slightly more dovish. And so I think that's why markets are actually rallying on slightly weaker than expected inline or slightly weaker than expected data. And that's what we saw from both the PMI and the PCE data on Thursday, Friday last week. Looking into this week, we've got two significant events in here. One being Powell is testifying to Congress. Now, the Fed speakers over the last few weeks, in fact, since the beginning of the year, have been pushing back on early rate cuts. And we've spoken about this a lot, that the market has now come in line with the Fed. Okay. So now the market for March, very little chance of a rate cut. May, very little chance of a rate cut staying the same. And by year end, where are we looking? Where we're currently 525 to 550, 425 to 450. So this has actually risen, but it's between basically 3 cuts and 4 cuts. So 4 cuts just taking the lead in here. But this was actually more priced in for 3 rate cuts only last week. And that's what the Fed, remember, in their dot plot chart at the end of December, at the end of last year in December, that's what the Fed told us in the middle of December, that they're probably looking for 3 rate cuts. That was the medium forecast on the dot plot chart. So 3 to 4 rate cuts is now what the market is pricing in. And the Fed have basically pushed us back to the market back to say, look, don't expect too much too soon. So it'll be interesting to see if, given more recent data, whether Powell continues with that rhetoric, or whether he maybe opens the door to something a little bit earlier. So we're looking for some kind of indication. Powell testifies to Congress in here on Wednesday and Thursday of this week. Now, the speech that he gives is the same, okay, and usually that's comes out a few hours before actually he makes the speech, okay, so that is released beforehand, and then we have the Q&A, and often the detail is in the Q&A when he gets asked questions from the members of the Senate and the House of Representatives. So they are on Wednesday and Thursday this week. That's going to be important. And then obviously the other thing is we have the US employment report, always much watched since I've been in the markets, often seen as the most important piece of data of the month. We get it usually on the first Friday of every month. It isn't the first Friday. Last Friday was the first Friday of the month. But if the first Friday of the month falls very, very early in the month, as in on the first of the month, as it did last week, then sometimes it's put back a week to give them the data time to be all brought together. So we are looking at this Friday, and we're looking for a notable slowdown in here to 200,000 jobs added, with January's number significantly above expectations, back at 350. Now, again, a number lower than expected might actually be good for the market. Okay, so probably what we don't want to see is too strong a number. A strong number will then maybe see the Fed, the anticipation be that the Fed may be even more or less dovish, so de facto more hawkish, maybe not cutting rates as early as the market wants. And so we're not really looking for a strong number. What's probably good for the market, or when I say we're not looking for, if you're a bull, so most investors are bullish, right? So if you want the economy if you want the market to go up, if you're bullish, then you're looking probably for a number somewhere between 150 up to maybe the low 200s. You don't want a number up in the high 200s. Or if you're a bear, you do want that number. Okay, so that's going to be what we've got coming up. Obviously, stocks were up. Bonds actually went to lower yields yesterday, so that's helped stocks go higher. Not yesterday, sorry, at the end of last week. We saw a movement down lower in yield. Stock prices went up, and we'll talk about that shortly when we come to the rates charts, the US bond market charts. US dollar has been pretty much sideways. Gold had a big surge higher on Friday, and oil futures rebounded, and they're at the upper end of a broader range. That says broader range, should be broader range. So what we've got coming up into this week, we're on the central bank side. We have the ECB, we have the Bank of Canada on Wednesday, and then we have the ECB on Thursday, and we're looking for maybe some indication there of when the ECB might be making their first cut. But the key focus is going to be on Powell on Wednesday and Thursday. On the data front, we have the services and composite PMI data, which is released on Tuesday, having had the manufacturing data back last Monday, and then the US employment report is going to be key. We also get Canadian employment report. So running through in here, nothing really of note today. So expecting a quiet consolidation type day today, given we've got a lot coming up. We have that PMI data in here coming out on Tuesday, Wednesday Bank of Canada, and then Powell, and then Thursday Powell, the ECB interest rate, and then also Powell again, and then on Thursday the US employment report is going to be the key thing we're going to be watching. Sorry, on Friday, excuse me. So a really busy week from Tuesday through Friday. Nothing of note today, so expecting a very quiet consolidation type day today. What have we got from the US briefing from Live Squawk in here? Well, Fed's power to double down on no rush to cut message. That's what we're expecting. That's the base case, is that we're not expecting too much from him, just basically pushing back on any rate cuts coming soon. We've seen three things to watch at next week's ECB meeting. Well, that's this week's ECB meeting, so we're watching out for the ECB meeting, obviously further out in the week. So nothing too significant on the overnight so far in here that's going to impact onto markets so far this morning. 5 things to start your day in here. Small stock record. US futures are quiet, but the Nasdaq on Friday went to its 15th record close of the year. Japan's Nikkei benchmark went through the 40,000 level in here, so stock indices, not just in the US, but globally hitting higher levels. Bank of America upped their target, various investment banks pushing their targets up for the S&P, becoming more bullish in here. And then strong earnings continue to be delivered in here and helping the markets higher. Bitcoin with the risk on is up through 65,000 in here today and continues to push higher. And then China Premier Li Qiang will not hold a press briefing at the country's National People's Congress, first time since we went down since 1983. Nothing really significant in there from China. Going into today, so we do have Harker speaking 11 o'clock Eastern time. Apart from that, it's very, 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 very quiet in here on the data side. So we're expecting a quiet session today, really. Stock pools after rally, see rate cut signals. That's looking out to Powell. And then oil is up, actually. OPEC, lifted by OPEC's cut in here. Traders aware of the UK's budget. That's the other thing. Sorry, this was not in. I forgot to put this into the macro matters and the weekly in here, actually. So it is the UK budget in here. So that is when the budget is set for the economy in here, potential tax changes, expenditure changes in here. That comes on, I'm 90% sure I'm going to say Wednesday. I don't see it leaping out in here to me on when it is, because I know that it wasn't in the. Let me just double check that. But and I know you guys are mostly trading US stock indices, but this can have a impact, if we do get a significant. So 6th of March, so yeah, it's Wednesday, that's what I thought. So Wednesday is the budget in here, so we're watching out for potential moves. We're not expecting too much, but if we do see some significant moves in the UK budget, it could then push the UK and European stock averages one way or the other. And if we do get that, then obviously that then in turn can move the US stock indices. So watching out for that on Wednesday. The UK budget as well might be of interest. There's that Bank of America pushing up their target for the S&P now to 5,400. Let's take a look at the overnight. So we said Nikkei making new highs in here through 40,000, up 0.5% today. The Hang Seng pretty much unchanged. European exchanges, little change on the German DAX and the French CAC, but the FTSE, UK FTSE is down 0.5% in here this morning. If we look at the futures in here, pretty much unchanged in here. Dow Jones actually down 0.25%, but very little change in here on the S&P and the NASDAQ in here so far today. We've already spoken about the Fed Watch tool. Let's take a look at the yields. And you see yields in here on Friday pushed significantly down in yield in here. So a significant push down the yield. That should be supportive of stock indices generally, particularly the NASDAQ. Remember, NASDAQ growth stocks are more sensitive to interest rate changes. So lower long-term interest rates are positive. So bond prices up equals lower interest rates positive for growth stocks, okay, because of the way growth stocks discounted present value is calculated from the interest rate as well. So then growth stocks benefit from lower interest rates. And so the NASDAQ, full of growth stocks. So NASDAQ does particularly well if we see bond yields going lower, which is bond prices up. So bond prices up helps, particularly helps the NASDAQ. It helps all stock indices, but particularly the NASDAQ. And you can see here, we spoke about this at the end of last week, at this potential basing going on the bond markets in here. So what we have seen in here is this basing, play out on Thursday, Friday with the data last week. So if you see in here a base on prices, so this is now pointing prices back up. This is the 30-year. Similar story here on the 10-year. We shifted out. We were previously bearish on bonds, and now in here pretty much across the curve. And you can see the short end really pushing higher in here, the 5-year. Not so much on the 2-year, but the belly, the short end of the belly of the curve, 5-year, pushing up in here, creating this basing pattern in here, and then that opens up further upside. So all in here, we've shifted to more bullish on the bond markets up, helping stocks higher in here too. And the stock indices obviously up at the highs in here. We can't be anything other than bullish. A quick nod to oil. Oil had a rip higher in here and looks particularly bullish in here. A really largest one-day rally on Friday since December. And not oil, sorry, gold in here. So gold looking particularly bullish in here, but oil breaking higher as well in here, taking out levels in here it's seen since November last year, and so looking bullish as well. So gold and oil looking particularly bullish in here after those strong runs. Maybe looking for a consolidation correction today, but then looking for further upside from potentially from gold and oil as we go into this week. I'm not going to run through all the charts in here because we kind of just touched on those, and obviously on Mondays we tend to look at the macros, but suffice to say, still looking bullish on the stock indices in here, still looking bullish on bonds and gold and oil. So pretty much everything we're covering in here, stock indices, gold, oil and bonds, all pointing higher into the start of the week. Probably today looking for more of a consolidation type, so maybe a sideways range environment today. So don't look for too much from today. Potentially a little bit more upside, but not looking for the kind of gains that we saw at the end of last week. But we do have a lot coming through Tuesday, Wednesday, Thursday, Friday. So we're going to be keeping our eyes on all of that. Okay, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you tomorrow for another bull versus bear webinar. Bye.